March 20th, 2024, MNQ trade review. Start off with the overnight session here. You can see that in this gray section. And there's a yellow line down here. It's just a gap that I marked before the market opened, or at some point early this morning after the market had opened. So there's a gap between these two candles. I'll zoom in on that so you can actually see that gap. So it's just a point of interest here. You can clearly see the gap between the two candles, and then my custom indicator plots a wedge where there's a gap between the two bodies. And so once again, I just try to document gaps between the bodies. Here that you can see on this doji, on this one there's a gap. And then there's also a gap between the doji and the next candle and this candle. However, you'll notice right here on this candle, this tail comes down and fills this gap. Once either a tail or a body comes down and fills the previous gap, it's null and void for me. So that's why that yellow line is still in there. So let's just get into, just going to go straight to the FOMC time, FOMC area. So here you can see that yellow line, and it was basically still holding. I wasn't trading at this time. I think I turned on my computer right around at this point in time, or started to pay attention right around in here. So moving on, first a 1 minute candle for FOMC was right here, very bullish, breaking out over the previous high from around 1 p.m. Eastern time. My time is Mountain Standard Time, so 11 a.m. Mountain Standard Time. And you get a nice move up and a pullback and some more continuation. So what I want to go through is just some of these waves that happened during the FOMC and how I analyzed them, and then I'll show you my trades later. So I'm going to get into this wave right. We're going to get into this right here. So what happens right here is there's a gap between these two bodies. Once again, the blue arrow shows you the gap between the two bodies. It could just be one tick, so it's very hard to see if your chart is shrunk up. That's why I have an indicator that plots it. And so oftentimes you're looking for gap and go. And so because we had a nice move up, I was expecting continued bullish move from the FOMC start. And this starts to move up. I really can't go long until price goes over the previous wave high. So this would be the previous wave high. But I did get long right around in here in this candle as it was breaking previous wave high. And then price went sideways. And then here's a gap that gets created between these two bodies. But what you'll notice is this candle here, it actually does, the tail comes down and fills that gap. So it's extremely bullish when price does come back down and wicks into, or not wick, but creates a tail and fills that gap and then gets bought back up. Here on the same candle, or the next candle, price gaps up again over this, and you'll see 2 minutes later, this candle came all the way down here, filling this gap, and once again it got bought back up. So this is also extremely bullish. So I'm going to zoom out from there. And then in terms of just trading waves, all of you know I look for basically candle body, under candle body. So this candle body is under this candle body after a move up. So that can be a pullback termination point, or kind of like the bottom of a wave, and you're looking for price to start to then move back up and create candle bodies over the previous wave candle bodies. And you can see that happens here. So price essentially goes flat, and it's kind of just consolidating in this range. Price then goes up, creates candle body over candle body, So it's candle body over this candle body, and it's also candle body over the previous wave candle body high. And so once again, this just continued demonstration that price is very bullish. Price does pull back, and as price starts to go up, it creates gaps. So it's once again, price is going back up, and it's gap and go. So my targets were above 18,500. I didn't trade that perfectly, but I will go ahead and show you my trades now. So zoom into this. So on this candle, on the start of the FOMC, I got long 2 contracts at an average of 322. So that's way up here, right here. And then as you can see, I sold one. I'll shrink this down a little bit. I sold one of those contracts at 399.75. So that's basically right here. Still holding one contract at this point, looking for price to move higher. I didn't add until this candle right here. So like I said, when price started going above this previous wave high, that's when I got long at 377. So damn near the top of this candle. Not necessarily the best add, but I'm following my process of getting into a position when price is breaking above previous wave high. Yeah, it's better to wait for the candle close. So yeah, I jumped the gun there. That wasn't the greatest trading. And then you can see at this point, I'm holding one contract from 322. I'm holding one contract from 377. And I change the scale of my chart. So let me just go to different chart and then come back to it or reset the scale. And so here you can see price got up near 18,500. So it's getting close to my target. There was about 360 something contracts on the offer at 18,500. My target was actually a little bit higher. I'll move out to an hourly chart. And here, what you can see on the hourly chart a few days ago on, March 13th. So a week ago, you can see that in the overnight session at between basically 2 and 3 a.m. Mountain Standard Time. So between 4 and 5 Eastern Time, there was a high made in the Nasdaq futures here. And so my thought process is typically the lows and the highs in the market are made during the U.S. session because it's U.S. market. And so these always become targets to be taken out later. So I actually did have my contracts placed above this, like one tick above this and one at 520. But I'll go switch back to the 1 minute chart, show you where I close those orders. And so here you can see I closed one at 493.5 on this candle, and I closed one at 500.25. So I did not wait for my targets to be hit, and you can see the targets were hit. The reason I sold is basically this is 1 minute after the close. Yeah, price can still push after the close. However, I'd sat through a pretty big pullback here, and I wasn't 100% confident that price would keep pushing after hours, but obviously it did. So that I closed my 2 contracts. P&L doesn't really matter because what matters is just following your trading process and having a process that delivers positive results more frequently than negative results. So you can see I had some trades earlier in the day, and those were small red day in the beginning of the morning, and then I was at 6 contracts total this afternoon and close those out as you saw. Thanks for watching. Have a great day.